Hey traders, Todd here. Welcome to the Wednesday webinar. Our customary 2 minutes late. We almost had it. Hope you guys are doing well. Happy end of summer. Let's see, futures are pretty good on the back of Hong Kong resolution, or Hong Kong withdrawing their desire to withdraw. So that's kind of a good news. All we need to do is get a little clarity on the trade front. A lot of interesting stuff happening here. Typically, this first weekend of September is sort of a hangover from summer. Everybody kind of watching to see how, when traders return from the south of France or from the Hamptons, where that volume goes. So, yeah, it's interesting here. Super tight August range. Wondering, we'll take a look at the S&P here. Wondering if we'll get resolution from that range. Before we, I should have checked. How's the audio? The audio level is good. Just give us a thumbs up there if it's okay, and we'll roll. Lance, Ezekiel. Okay, thanks, Terry. Steve, Jonathan, another Steve, William. What's up, Lance? So yeah, it's pretty interesting here. A lot of sectors happening, a lot of kind of sector rotation happening here. We'll talk about sort of the macro kind of forces driving here. Really interesting stuff happening in the metals. Bonds continuing to push higher, though we're off the best levels right now. So yeah, kind of a lot of fun stuff happening here. We're going to look at some macro kind of themes driving the market here, specifically those industrial and precious metals. I talked about it on Fast Money last night. I got back late from the city. My show ended at 5:35, and I should have the New York City map. Morning, Jim. Jim will laugh at this. So the Nasdaq's about 43rd, 44th. Penn Station's 31st. The show ended at 5:35. My train was 5:47. I ran my ass off with my bag in my, I don't wear a suit, but I was like 12 blocks. It's definitely faster than a taxi could have gone, and I missed it by 1 minute. The doors closed, so had to take the 7:15. Anyways, it was good exercise. So, all right, guys, so let's kind of jump in here. Let's say hi to the team as always. Terry, Alex, good morning, guys. How are you?
Morning.
Hey, Todd.
How's everybody today?
Yeah, we're good. Looking good. Bright and chipper, you guys.
Everybody on the southeast coast dodging that hurricane.
Holy bananas.
Keep our prayers that eye stays offshore. It's looking pretty good so far, but it devastated the Bahamas.
Absolutely. Is this one of the slowest moving? One of the slower moving. I mean, was it less than 10 miles an hour? I mean, that's.
Yeah, it was down to 1 mile an hour yesterday. I saw, and it just sits there and pelts you with rain and wind. That's just awful.
Brutal. Yeah. Hopefully everyone's
okay. Go out to everybody affected by the hurricane.
Absolutely. Alex, you got hurricanes in Serbia?
No.
Tornadoes?
Nope.
Floods?
We had one a few years back, which was a severe one.
Okay. All right.
But it happens once in 10, 15 years.
Okay. All right. Perfect. Maybe we should all go to Belgrade. All right. So look, let me just jump in here. I want to take you guys through a few things. I want to bring Alex and Terry back in here. No guests today. I wanted to kind of hit you hard with the charts, show you what's happening. A couple of you guys are complaining that we're getting too off topic and you want more charts. The show will evolve, but we'll hit you with charts right now, being that we're back into September. Ranges are pretty insane right now, and I cannot wait for these ranges to end. It's like it's almost become a part of us here. So Alex and Terry, I'll bring you guys right back in here in just a little bit, and I kind of want to jump into to the market. So we got a little fun feature here on the Wednesday webcast, virtual set that is Saratoga. That's a view right out of our office. We're on the 86th floor here in downtown Saratoga. No, that's a lie. That's a drone floating above. But watch this. Here's a cool new trick that I have. Ready? Watch this. We can go over here. What's up? Or we can go over here and kind of look at the charts. All right, so let's give you the context of where we are here. The ranges have been ridiculous. If I had known, I mean, we all should have just gone somewhere, maybe not Florida, but just gone somewhere for the summer and not even look at these ranges. So let me start a little higher here. Let's start up in the daily. I still think we are in triangulation here. It's been extremely tight. Which way do we go? What is the wave count here? There's several possibilities that you have to entertain. Okay, this has been the month of August. August 1st, and here we are now, September 4th. As I said, volume is trickling back in. Traders are coming back from the Hamptons and the south of France and wherever everyone vacations. They are coming back, and we're looking for a sign of things to come. So, guys, there's several possibilities, and I've been doing this business long enough that at first it was like, okay, I got to realize that it's okay for me to tell myself I'm okay, and I don't know exactly where the market's going. Then, once I started to get a little bit of a name in this industry and started to monetize the skills that I've built by doing the membership business, it took me some while to get the stones up to say to you, especially if you're paying me on the membership side, I don't know what's happening. This is a time I have no conflict to say, anything can happen here. There's several possibilities, guys. We could be about to do completion of a triangle, resolving on the downside. We might break topside. I'm giving a slight 5 to 10% edge that we do break higher and head up towards 3,200. There's a potential nasty wave 2 forming here that does drop us back towards 2,000. I don't think the future is written here. I don't think you can know. I think the big buy or sell orders and the resulting cascading order flow that will drive us from this consolidation, I don't think is even planned yet. I mean, that's how undecided I think we are. So one possibility, I just want to throw another one that this is Elliottwave Wednesday here. Another one is this could be a diagonal. Right, this could be a diagonal up, meaning that's the end of 4. Here's 1 of 5, 2 of 5, 3 of 5, 4 of 5. If we make one more new high that is less than the percent distance traveled right here, we start to fail. Look out below. So let me just put this level in front of you as a possibility. We need to be, if this is 1, that's 3, this would be 5. It needs to happen below 31.33 right there. Okay, if we do break higher and you start to see failure up here, look out, that is a possibility. Okay. All right, so let's take a look at, for now, guys, this is my primary account. I still think we go higher. I've maintained this bullish outlook for some time. And if we drill down from the daily down to the half day, this has been your August range, a big old nasty B-wave triangle. You can begin to count a motive impulsive rally from the lows here. And we potentially have dropped down in wave 2. This morning's bid up about 1% in the pre-market is certainly indicating that this might be the right kind of path. So here's the count I was actually doing at the Nasdaq yesterday from Fast Money. I thought about putting some longs on for this sort of wave 5 move up here. Okay, so we're going to get that 1% gap here. Futures are going to put us up, where are futures trading? ES is trading 29.31 right now. We closed at 06 in the cash market. So you might have a little bit more upside before you look for the wave 5 move down. Inside of orange 3, there's your 5 wave move right there. So I think I will start to reduce some of our hedges in our portfolios. We still hold TLT. Let me do my tricky thing here. We still hold TLT. We still hold GLD. I still do hold some SDS, which is some inverse ETF in our stock portfolio. If we begin to, and I probably will look to reduce any short exposure and put some long stock back to work. Okay, so let me just bring in the team here and have them kind of comment on on what they think is happening. Let me just do a quick adjustment here. Position. Let's bring Terry over. Position 2. There we go. Zoom you up a little bit. And there we go. Guys, what do you think? Do you guys have any way to back up, any feeling, inkling as to which way this S&P goes?
Personally, I'm a perpetual optimist, and I'm looking for it to push higher. But all it's been doing is chop up and down. So I like this count that you've got, the red count, because it gives me it satisfies my optimistic view that we're going to push higher. I'm not ready for a bear market to start, and I personally, the fundamentals I don't believe support it. So it will at some point. I just got to believe we push higher from here.
All right, and Alex, before you jump in, let me just say, anytime I go on CNBC, and CNBC has their own sort of subsect of perpetual haters who call us perma bulls. Yes. Look at my wave count here, guys. Triangle 4 through middle of 2020 gives us wave 5 of 5 of 5 towards 4K and the S&P, and then you don't even want to know what the implications are from there. I have a different count. You take this Elliottwave chart off the semi-log scale, you go to arithmetic, it tells a much different story. But being a perma bull, hell no. Okay, we might have another 2-3 years, which is in agreement with the average lead time yield curve inversion gives you towards the stock market top. But after that, there's a significant downside implication.
We talked about this months ago too, about this being a large, very large sideways market. I recall back maybe even a year ago, we started talking about how sideways and the duration that we expected this sideways move to make. So
you're 100%
no surprise we haven't got out of it yet.
You're 100% right, and we began calling this right here, and it was December of 18. I said this is potentially a 3-wave down, and we could be in a triangle for a long period of time. And this is still valid. We could get another move, 31, 3,200 if we do fail, and that's the other count I gave you, which is a 5-wave ending diagonal. If we could be sideways through 2020, and this is the count that Trading Analysis has been on for, God, what month is it? September. I mean, this is a year and a half that we've been tracking. Yeah. Exactly. That's not. What am I talking? I'm crazy. 10 months. 10 months we've been tracking this.
Yeah. It's your time period though that you're all observing, right? So investors are looking at the long term, and it's not a good market for investors to go sideways. The hedge fund guys are going to be pulling their hair out trying to beat the market every day, And
I think we're the only one. Everyone's talking about either massively higher or massively lower. I mean, is there anybody else out there, even in the Elliottwave community, that's saying we could be going sideways here for a good year or maybe two? I don't see a lot of people out there. I think that's the last thing that people are expecting with interest rates, U.S. yields dropping to new lows, yield curve inversion, precious metals spiking. I mean, there's a lot of stuff. Go ahead.
It doesn't make the headlines. It's not good news, right? It's, it's not thrilling. It's not going to get you. Oh, we're going to go sideways.
Yeah.
We're going sideways tomorrow. Yep, we're still going sideways, guys.
Yeah, they don't want to hear.
Sell, you don't get your ratings up. You got to explode. Oh, the Dow up 226 points today. Oh, the Dow dropped 226 points today.
All right. You're bashing bashing on one of the organizations that sends me paychecks. So we're gonna leave that right there. And one thing that I would say, guys, is we are short one of the last few leveraged short positions that we hold is emerging markets. It's not going down, right? Look at this thing. It's not dropping. If we pop above this range, above 40 and a half, I'm going to have to take my loss. And here, let me just show you a loser because we keep it real here at Trading Analysis. Where's my platform? If I could only find my platform. Yeah, we have a pretty good loser on in EM. It's a hedge that I wanted to have. It's just, it is what it is. I've got the 38-35 put spread in October, down $600 on it. Like, that's fine. I'm hedging a longer term portfolio, managed accounts here. Here's our hedge section up here. TLT, SDS, and GLD. So SDS is your inverse, double inverse S&P, down a little bit. TLT's rocking. Gold's actually not doing that much. I got a late entry there on GLD. But, mostly, in our risk on section, we have 80, 70, 79% long equities right here. So in this chop and slop in August, we've maintained long positions. We have 11,800 in terms of hedges. So, a relatively small hedge. And if we do continue to break higher, based on the two accounts that we showed you at the top of the show, we're going to look to reduce those risks. All right, let me just go back over here. I'll show you a few more things here that I want to kind of show you. There's some interesting macro flows going on right now. But first, let's just take you through the indexes, the other indexes quickly here. The Nasdaq is, boy, oh boy, is it interesting right here. Looks like the wave count is acting a little funky. So if the Nasdaq is going to fail, if this is a corrective rally, it should fail around the 786 to 618 retracement. That's going to be 78 to 7,900. The bullish count in the Nasdaq, which I don't even love either. I mean, this is such a funky little consolidation here in October. If by chance we do pop up, I mean, this is concerning. Like, I think, like I said, I signed like a 5% chance that we rally up. But if we do start to sell down, there's a long way to go and we'll get very defensive. As I said, I don't think the market knows which way it wants to go. So let me just show you bonds. Now, there's some interesting dynamics I want to show you guys. I did lock in mortgage on the 30-year, which is the 10-year Treasury is going to be the best kind of proxy for that. I was kind of trying to time it. I still think we're in a wave 4 here in the bonds. We have a TLT butterfly going on that will make money if we just kind of hang out here in wave 4. We're at the point for bonds that we could begin to see that in sort of a consolidation. So that's bonds. Gold is also going to have a very similar wave count here. 1551 is where we are. We are at a pretty extended level here. And if we just focus on this wave count here, so from 1 up and 2, if you do a net percent distance traveled, equality in this orange 3 and orange 1 was met at 1465. Okay, we're through it, which means, okay, we've got the proper length of this wave right here to be considered the third wave because it's longer than 1. The textbook move would get you to 1603. That's the 161%. From there, those are your 2 fib upside targets in wave 3, but then you need to find 5 smaller waves inside of 3. I don't quite see the 5-wave move here. There's certainly nice price dynamics here in gold. There's good trend waves, there's good corrections, but my best interpretation is that we do have another move up here in gold. So though I'm a little kind of neutral on bonds, the correlated gold market, I think, is also ready to push up towards 1600. I'll continue to hold our GLD. The big one has been silver. And I talked about this on Fast Money last night. I just want to show you this really fun kind of relationship that I used to follow a long time ago. Silver is ripping right now. And this is just a crude little wave count here, sort of a 5-wave move up, A, triangle B, down in C, potentially up in 1, down in 2. Same concept, guys. If you look at the percent distance traveled in 1, that sets the minimum threshold from which you'd expect wave 3 to travel, because wave 3 is often longer than both waves 1 and 5. So distance traveled in 1 sets the kind of the minimum for expected distance in wave 3. That's at 2177. And what's interesting about that is that's the old high from 2016. And this is the point that I was making on Fast Money last night. So 2105 is the June of 16 highs. We trade 1942. The 100% 3v1 is at 21.77. I think this is immediate upside target. Silver can rally with a falling stock market, with a kind of deflationary pressure along with gold, or it can rally with an inflationary stock market up move. You know, it's got industrial properties as well as precious metal properties. So this was interesting, I thought, on the gold silver ratio. Let me just check my notes here on the yellow count. So this is an old sort of macro indicator that we'll talk about related to the stock market. But traditionally, the gold-silver ratio, once it gets up to 90 times gold to silver, indicates that gold's overbought and silver's underbought, or maybe said oversold. So you can see in the white, here's 2003. Over on the right scale, you got about to an 80 on the gold-silver. 2008, credit crisis, you got 80 and a half. Up here in March 2016, you got 82. We just went up to 93. So that's the most overbought gold-silver ratio since my data goes back, and you could go, decades back on this. Unfortunately, this is as far back as my data goes. And what's interesting is when you get to that 80 to 90 gold to silver ratio level, silver becomes a strong buy. Point in case right here. Boom, beginning of a massive rally in silver into 2008. Here we go again, 2008. Gold silver ratio in white is topped. Silver becomes a big buy. Here we go again. Okay, you got a little spike right there, a little bump up, made a new low, and then silver put in a nice little rally there. We've sold back. We've done a double bottom towards around $14 an ounce in silver. We're falling hard. And what I was mentioning is while gold is above the June 2016 high, silver is not. So you could say silver is very overbought, but if this gold-silver ratio is going to relieve the overbought status, it should be down at 70, 65, 60. So we need to drop basically 50% to relieve that overbought status of gold-silver ratio, which points to silver going significantly higher. Now, here's another thing I want to bring your attention to. There's a long-standing macro correlation when gold-silver ratio starts to fall. I hope this works. The stock market is a buy. And there's been a massive divergence that's occurred here. Let me just get silver out of here. And let's just focus on this. Again, if you were to go back decades and look at this, this is a long-standing relationship. If silver is going to outperform gold vis-a-vis a falling gold-silver ratio, the stock market and the S&P here typically rallies. Same thing, big rally here. Gold ratio sells off here. That was a credit crisis low. Now, in this era of QE, of central bank easing, interest rates racing to the floor, which is no more evident than right now than ever because we're catching down to the rest of the world, gold has been the massive recipient of flows in this kind of era of central bank manipulation. So this is another relationship that I think needs to be vastly unwound. This is a divergence. Even though they're trading together, there's decades of precedent to rely on to show that this needs to separate. Either gold-silver ratio needs to drop, or perhaps if this is going to continue to go up, the stock market drops. But this divergence needs to be unwound. I think for now, this gold-silver ratio is going to go lower, allowing the stock market to go higher based on that 3,200 kind of area of resistance that we showed you, creating a little gap between these two important charts. Okay, yeah, Terry, and if there's guys who want me to look at charts, let me know. There's one other kind of macro I wanted to look at that I thought was interesting. Okay, you guys okay with that so far? Yeah, if you guys want to... let me bring Terry and Alex in here. If you guys want to send charts, just tweet me at, we should have it up on the screen. We'll get it as a kind of a lower third. Do at Todd Gordon trade. And if you, Alex and Jerry, if guys come in with a chart that you want me to feature, you guys just let me know. Okay, perfect. So from here, let's take a look at yields. Yields are obviously the hot story right now. I showed you where I thought we were in the bond market. I showed you the 30-year bond. I can show you TLT here, which again, I'm starting to think that we're into sort of an overbought status. I think we might, oops, what happened to you? Just disappeared. Uh-oh. All right, well, my wave count, just a little bug in the system there. I was just showing you a sort of a wave 3 looking for bonds to go sideways. So I think the move in bonds for now is over. And there's an interesting other macro correlation that I want to talk about because this is such a macro-driven market. I got on you guys a little bit. Some people a little mad we were talking about Trump. Somebody even brought up the idea that we don't mention Trump by name. Which I don't understand. Why would you not call the president by name? You want to talk about the things that are driving the markets. Right now, what's driving the markets within these August ranges are presidential tweets, monetary policy from the U.S. and abroad. Those are the things, and obviously geopolitical tensions coming out of China. Those are the things that are driving this market. So let me show you this. TYX, we're going to look at him on the green count. Okay, this is a chart that I was showing our members, and this is interesting. This is the 10-year U.S. yield and crude. And if you think about it, generally bonds should go up in deflationary environment. Bond prices, 30-year bond, 30-year bonds, 10-year notes should move up. TLT should move up if price levels are viewed to be falling, right? The value of a coupon payment in a falling price environment will increase in value as you go down. That's why there's a bid for bonds, which you guys know as bonds go up, yields go down. So if you look at the crude oil market, if crude is dropping, that's viewed as a deflationary force, which means yields should drop because the price of the bond is going up. Well, that means that crude and yields have a positive correlation because crude and bond prices have an inverse relationship based on inflationary, disinflationary, deflationary pressures. There's a big divergence happening right here on crude has held a bid fairly well. Okay, well, yields have just got smoked. Big divergence. And the last time that we saw a divergence like this was back in 2011 and 2012. Okay, I think we had U.S. debt downgrade. I think it was the onset of the European crisis, etc. So this is interesting. And what happened here is in 11, yields dropped sharply, okay, down into 2012. So yields were dropping in 11 and in 12 while crude was maintaining a really big bid. And then what happened was crude didn't give up at all and didn't catch down to yields. In fact, what happened were yields caught back up to crude. Then 2013, we had the big drop in bond, big drop in crude, big drop in yields, big move into bonds, and the correlation reasserted itself. The same thing is happening here in 2019 as was happening in 2011 and 12, which is yields just made a big drop. While I've made the case and made the argument that crude is not showing any kind of real signs of risk off, risk aversion. In fact, I think with this kind of deflationary, global inflationary, these forces that we're seeing from Asia and from commodity related economies and the currencies, crude is hung in extremely well. So I'm wondering if the same thing's going to happen again, where yields will perhaps catch back up to where crude is. That for me would be a bullish stock market development if that happens. And if we start to see this happen, as I said, I think we're in a little bit of consolidation here in yields. But if I'm wrong, and I'm completely fine being wrong, then if yields start to move back up, bonds off, crude will get a bid. And I'll tell you what, one of my sleeper sectors that no one's talking about is XLE. And if you look at XLE, the energy ETF, I mean, you could make the case that we have a massive triangle happening here in XLE. There we go. Okay. No. So if you look at it, you have A, you have B, you have C to a higher low, D to a lower high, E to a higher low. I mean, that's a really, really nice triangle in XLE. So if that's going to happen, you know, we even have a 5-wave move from the lows, ABC moved down, we've broken the trend channel, and it looks like we could begin to push higher in XLE. And that's something that not a lot of people are talking about. I had this ready to go for Fast Money last night. A couple names I was looking at was Valero, VLO. Hopefully my analysis is still there. Yep. Just a real simple technical uptrend here in VLO. Nice sort of triple bottom forming here, ready to move on up. And then one of the strongest, which is the second biggest holding in XLE, is Chevron. We're about 15% off the highs. Strong move here. So those are some portfolio holdings that I'm going to look at. Other thing I'll talk about, I'm going to bring the guys in here in a second, are utilities. And everyone said, this is pretty funny. Everyone said utilities are too overdone. They're done. They're too overbought. Yesterday, the Utes were up 1.6% yesterday. Massive move higher in utilities. Staples continue to go right up to the highs on staples. I do have a good 5-wave count here. I don't see, you know, based on a simple wave 5 move here, why wave 5 wouldn't be somewhat equal to the percent distance traveled in wave 1. So I'm talking about kind of conflicting forces here, because I'm talking about if crude is going to stay bid and yields are going to catch up to crude on the upside, you know, this rush for dividend payers is probably not going to continue, and I'll be wrong. As I said, this is the beginning of this webinar. I was like, I don't know what's happening, but I'm looking at it from all angles, and I don't want to be surprised when the move finally happens. But staples are bid. Real estate is extremely bid. XLRE is a newer sector spider, but right up in the highs here. So there's certainly a quest for yield up here, and this is something that we want to look at. If you go through some of the utilities, the charts look great. If I flip through, we don't have time for it now, but they just look absolutely great. Okay, so let's bring the guys in here in a sec. Sorry to leave you guys hanging there. What do you think, Terry? Any takeaway, or you?
Let's let Alex talk a little bit about the global currencies, because you know you've been talking intermarket analysis, but we also have a global interface between what's going on in the U.S. market. So,
all right, perfect, Alex. You're up here, seeing Eurodollar, and you are live.
Yeah, overall I agree on your S&P premises. So still early to tell, but we will see it. As soon as we go above 3,030, we will be more sure that we have a more upside. So on currencies, I still think it is a central bank play. We have this month's Bank of Canada just in a half an hour. We have ECB, and we have a Fed on 18th. So
here comes the central bank blitz.
Yeah.
Yeah.
Still tracking several accounts. This one says we are done in this ending diagonal here in an ABC on Eurodollar, and we move higher. And this one is still following the bearish count to 105, 106, 107. So still hard to tell. I want to see 5 waves up and a correction to confirm some type of reversal on the potential Federal Reserve cut. But looking the macro picture, I'm more on this side of the bearish view for Euro, because I think Draghi is going to do additional either QE or it's going to move deposit rates to minus 0.5. German 10-year yields are dropping like a stone, and they're approaching -1. Can you imagine that?
That's unbelievable.
Yeah. So,
Unbelievable.
I mean, yields are also dropping in Canada bonds, Australian bonds, UK bonds. So all around the world, it's like a rush to the bottom. So this is really disrupting the FX. And one thing I'm looking for is this Euro New Zealand count.
Mm-hmm.
I'm still looking lower in this Euro New Zealand. So I have this. I don't know what happened here.
Yeah, a little gap in the data.
Yeah,
Okay.
something. Okay, I'm still looking for an ABC move up to complete.
Mm-hmm.
Let me see if here it's working. Okay, here it looks nice. So let me just rewrite this. Oh,
Leave
still
this
the
one.
same thing.
Yeah, it looks like there's
okay.
data's having a problem.
The one thing I'm looking here also is this dollar-yen correlation. As I'm tracking the FXY very attentively. I'm still looking for this triangle in B wave to be over, and dollar-yen moves lower either on a rate cut from Fed, and I'm looking for a small pullback up to this 108, 109 zone, and then move down in 4 and 5 for this large B wave down. So that is what I'm tracking on this FX space. Your favorite Aussie yen is moving up.
It's coming back hard, and this is key. I mentioned this on TV last night as well, which is, this is like a 6-year shelf at 70 in Aussie yen. And, don't dismiss this as equity traders. This is so important. Give us about a 5-year look, Alex.
I don't think we have here a 5-year look.
Oh, really? Okay.
Yeah, we do.
No, we don't.
I thought we loaded the history on this.
Yeah, but it was erased.
Okay, guys. So Aussie yen, guys, the charts aren't showing correctly. Aussie yen has a 6-year base at 70, and I keep thinking back to my hedge fund days trading FX against S&P futures, and as the yen crosses, dollar yen and the yen crosses were falling, the S&Ps were falling. Aussie yen is a huge base at 70. If you think about what's happening, if it breaks through there, Aussie selling that's a proximity play of commodities exports to China. Yen buying is a big global macro deflationary signal. If Aussie yen were to break, for me, I think that would have huge implications to equities around the world. And as Alex is showing you, now we're 2 figures off of 70. So perhaps, kind of stay of execution here.
Yeah, I'm looking just for a small pullback to the upside.
Yep.
And potential reversal for the wave 3 down.
Okay.
And so I'm going to prepare to look for this level. It's around 73, 74.
All right. Show us. That's good. Show us anything going on in cryptos, or are they officially quiet?
Cryptos still sideways.
Okay.
I'm looking for a small move lower to complete this green wave 2. Actually, I'm looking this complex WX, now A, small flat in B. So I'm looking to put some shorts around 11,200, 400 for this wave C down.
Nice.
We have several wave counts, but I'm kind of the most confident in this one.
Okay, I love it. Certainly not acting as a safe haven here. Nothing impulsive on the top side. Looks good, Alex. Thanks for that. Good work.
No problem.
Good work, sir. Okay, so from there, guys, I see a little chatter back and forth on gold. Grant says, I want angry Todd. Nah, I'm too tired. Too tired to be angry. You guys have been great. Everyone's behaved. No one's yelling at me. I'll get angry. I'll get fired up. Yeah, it's just quiet here. Somebody's saying gold's going to sell off. I was just reading some comments there. Gold's going to sell off because we're in a deflationary market. Not true. Gold can rally in an inflation or deflationary kind of market, so that's not true. Longer term, I can show you where we are on the gold count. I don't know if we hit it here. Let's see. Let me bring those wave counts in. Okay. We can even go to like a 2 week. This is long term. So the question on the table is.
You got to put it up on the. You got to put it up on the chart. On the
thank
page
you very much. Thank you. Question on the table is, was that 5 waves up, and this is a corrective structure on the way down? What exactly was that? If this is 5, this will be an ABC up and will drop, okay? Like I'm showing here. Problem is, the agreement in gold between A and C, the B wave retracement of the proposed 5 wave move is at 1670. So you still have $120 to go until you're at pretty significant resistance. The market had its shot to hold 1500, the first cluster of fib resistance, but we couldn't. Okay, it looks like we're pushing higher. So I still think we have higher to go. If you fail at 1670, okay, fine. Then we can talk about the C wave. If you get through 1670, and again, this is what I said on Fast Money last night. If you get through 1670, that's going to be the 786 retracement of the 2011 to 15 drop. In my experience, when you get the 786 retracement violation, you reach for the 127.2 extension, which takes you to a new high, which will be 2,273, and we're never going to hear the end of it from Peter Schiff. And then we're going to go, who knows where we go from there. So, we'll see. We'll see. We should get him on the show. I bet you'd come on. You think Schiff would come on? I think he would.
Yeah, sure, why not?
Already.
Why not? We got to get him on. Do you guys want to see Schiff on the show? Let me know in the comments.
He's not an Elliott guy though, so he uses.
So what? Not everybody's perfect. So on top of 1687. Oh, market's open. On top of 1687,
and we're off.
Yep. The other thing, guys, is that 1530. Okay, so that was the quality of 1 compared to 3, and we're not selling off from it. We're at 1552. So if it's in fact ABC, we don't hold 100%. Probably going to reach up towards, as I said, the 786 and eventually the 1618, which makes this likely a wave 3. Like that. So I think, with pullbacks, with opportunities, I think there is a pretty safe upside pocket towards 1680 and 1819. And again, silver, if we can get a pullback there, I think that's going to be good. So let's just take a look. How are we looking here on the open? I just like to check my sector spiders. Energy leading the way. What did I tell you guys? Look at that. Nobody's talking about this. Is anybody out there in stock market land talking about energy? I can't even believe I'm talking about energy. You guys watch that one. That's going to be a sleeper. And if you want to give a little dividend yield that's not so overextended in utilities, real estate, and staples, we might need to look at energy. That's interesting. Behind that is materials, XLB. So we're kind of getting a reflationary trade here to start. XLK up 1.2, lagging, no surprise. Staples, utilities. I don't have real estate in here. I don't know what's up with that. Communications up 1.6. EEM up 1.3. We're going to go ahead and cut that short. Breaks my heart. I'm going to take the loss, guys. I'm going to take a loss right here with you. Yes, we're real traders. We have winning trades. We have losing trades. All part of the business. We are using this as a risk, sort of a hedge against a longer term portfolio. I'm going to close this thing out. 24 cents. And we're going to send the alert out to our members. That trade is now closed, loss taken, hedge removed. Okay, that's interesting. TLT off, 0.4. Oh, there you go. NASD. I do think we're starting to fall into that kind of consolidation in bonds, one of the possible wave 4 consolidations. So I think the top might be in for now. So pretty consistent with what we were talking about at the top of the show. Let's just take a look. I want to see a couple stocks, and then we're going to tell you about a webinar we have coming up next week. We were going to do a webinar tonight. I pushed it back. Just too much going on. Pushed it back till next week. So we'll talk about that. Amazon looks like it's coming back from the brink of a potential collapse. It's held this uptrend support at 1800. Really needs to go 1830 bid to have anything that's going on here. Apple, I continue to hate this chart. It's terrible. Like, what the hell is this? If anybody knows, tweet me. Tell me what's going on from an Elliottwave point of view. I don't know. I mean, it could be just a big you know, what if it's a big ass triangle? What if it's so nasty? That's a tough one. Apple's super tough. Google got hit with some antitrust, but again, I think fine. It looks very good. It looks very supported. I think Google eventually will move higher out of there. So we could have a return. Home Depot pulling back a little bit. I like that one. Intel, I think, is coming up off the floor. Here's another little value scoop if you're looking to get a yield. Again, a triangle. That looks really nice. Could continue to come back. AMD has had every opportunity to break this 20-year trend and just can't seem to do it yet. So I do like Intel on a scoop. Microsoft, just a lot of consolidation, not doing too much. AMAT coming back after chips had a tough day yesterday, but Applied Materials looking good there. So Roku, of course, is up another 2.5% today. No surprise there. There's some stocks that we're going to go shopping for here with our members in the portfolio. Okay. So before we go, guys, there is a Terry and Alex. Thanks very much, guys. I appreciate the work today. Okay, there is a webinar we have coming up here, guys. It's going to be next week. Let me pull this up. It's going to be trading, if you want to get to this. It's going to be an informational webinar, tradinganalysis.com/ride, R-I-D-E, riding the volatility wave. We haven't done one of these in about 6 months, a webinar. So definitely come in and check it out, /ride. We're going to be talking about sort of our multidimensional approach in terms of the tools that we use. We're going to be talking about, obviously, the technicals, our read on the fundamentals, our intermarket analysis, and also, you know, our vehicle selection, whether we trade the options market, whether we trade the stock market, how we construct our portfolios. Obviously, there's going to be an invitation for you to invite us, invitation to join us in the membership. But it will be an information-packed webinar. I'm working hard on it. So it's going to be on September 12th at 8 p.m. Okay, so go to this URL right here, tradinganalysis.com. www.tradinganalysis.com/ride. And I think Terry or Alex will put it in the comments below. Okay. So that's it. Let me do this. /ride. Okay, guys, we're gonna leave it there. Hopefully that helped. Throw a let me try this view right there. Throw a thumbs up there in the YouTube window if you enjoyed the presentation. Members webinar starts in 25 minutes. We'll see you guys there. Kind of looking forward to the range break of August. It's going to be sad to see this range go. It's become like a part of us, but it's all right. 29, pushing the top end. Almost time to go. All right, guys, we'll leave it there. Thanks, and we'll see you on the webinar Thursday, and I'll see you Wednesday. If not, we'll see you in the Trading Analysis members area. Good luck, guys. See ya.